What's going on, traders? How is everybody doing? I hope well. Start of August here, and I've been radio silent for a while, but I thought I'd come on and do a new video here for you guys. I've been mostly doing updates on my Twitter, links in the description if you want to find me there. But I thought I'd go ahead, start of the month, and do a video for everybody. We're still going to do this analysis here on the E-mini S&P futures and the NQ, a little bit more geared towards the day trading side of things, but we're going to do it here on the market profile charts instead of standard charts. And I've been doing a lot of analysis on these charts recently on my Twitter, and I'm just going to stick with it here, try it out. Maybe we'll go back to the old format before on regular candlestick charts, but I thought I'd change things up here, do something a little bit different. And of course, remember though that this information, everything on the video, is not financial advice and is just for educational and entertainment purposes only. So, but of course, we're going to start off the video like we usually do. We're going to look at the economic data. Of course, last week we had FOMC and NFP, and before getting into the charts, you can clearly see here though big gap down here and not a pleasant reaction from the market overall. So that definitely is worth noting, but we will get into that with the analysis. With that being said, let's get into the economic calendar though for this upcoming week. I believe it's rather quiet considering we had a 2-for-1 big data last week, so should be pretty quiet, but let's see what we have in store. We also had some major earnings last week with Apple and Amazon, Microsoft, and Meta all reporting. So with those out of the way as well, let's see what we have this week as far as earnings are concerned, but let's look at the economic calendar here first to start, and let's expand this a little bit. Okay, nothing really on Monday. Tuesday, ISM and U.S. Services PMI coming out at 9:45 and 10 o'clock. A little bit of Fed speak here on Wednesday the 6th at 2 o'clock. Initial jobless claims at 8:30, paying attention to that. Some more Fed speak here at 10 o'clock on Thursday the 7th. At 10 o'clock there. Consumer credit at 3, paying attention to what Bostic has to say, and consumer credit as well as that initial jobless claims. Not major market movers, but we'll see. A little bit more Fed speak, but on Saturday. So nothing on Friday, but Saturday we have some comments from Bowman coming out as well. So maybe they have some type of a conference or something going on, but pretty quiet as I kind of thought it would be this upcoming week. Okay, as far as earnings coming up, well, we do have PLTR after the close on Monday, so that will be interesting. Not really a market mover, but definitely a kind of a cult stock. Hims and Hers, same situation, kind of a cult stock. We'll be watching that. Pfizer opening up in the morning on Tuesday, but nothing really that interesting until after the market closes on Tuesday. AMD and SMCI certainly will be interesting to watch. Upstart and Rivian as well. Snapchat a little bit. I do have some equity in Snapchat, so we'll see how that does. Let's see here. Uber could be interesting. We're getting into a lot of that B tier names here now after Apple and most of the major Magnificent Seven have already reported, and Disney coming out before the market opens on Wednesday again, but not really market movers. McDonald's we can take a look at, and DraftKings kind of fun to watch. Pinterest, kind of sympathy there with Snapchat, so they usually move together. The communication sector, we'll see how those do, but again, not really market movers, just really kind of coming into those B tier stocks now. Some of them are just fun to watch and trade. So, but nothing really that's going to significantly impact the market. So we are good on that front. Okay, so let me get a drink of water here. Okay. All right, so let's give this a shot and see how we do with our analysis on the market profile chart. Here we're going to start off on the E-mini S&P futures, and let's see what happens. Okay, so we have gap down in the market, obviously, and we can see here, and okay, great. I'm just trying to make sure that the numbers actually stay out on the side there for everyone to be able to see. All right, cleared gap down here on the market, breaking and not even opening even close to the lows on the 31st, opening here down back pretty much in the middle part of the month. You can see the profiles here matching up pretty clearly. And for me, where we closed right here at 62.63, right, we still closed more or less in the bottom part of the range here. So that, I would say, is a bearish close. But what would I need to see? And we're going to talk about the bull case first. What would I need to see for the chance of a further retracement, potentially a gap fill, question mark? I don't know, but we'll have to take it one step at a time. But what would I need to see, right? Well, we did close very close to the point of control here, and our VPOC as well. But really, I'm going to need to see us start to finish up over. Now, we do have the point of control, like I said, here at 62.65, we're going to call it. But I need to see up and over. I'm going to say up and over at 62.65, 62.70. I'm going to feel a little bit better. 75 really is going to be my confirmation. But if we can start to see price hang out right in this area here, I think that that would be a good consolidation. We're not quite over it yet. Like I said, we're still underneath this 62.65. So as long as we stay under that, the bears do have a chance to push us back down. You can see this right here is where we closed, but we have the opportunity the bears to push us back down, back towards these single prints in the J era period, and retest those lows from the Friday session. And will we see any buyers there? Well, of course, we are not sure about that, but it certainly could be a place where we're setting up for a double bottom, or even what we would potentially look for is a push back below and then a recapture, right? Then we come up, make a higher high, right, breaking this high, and then we look for a pullback, and we look for our imbalance and a push up longer. So I definitely would be potentially looking, if we do retest and sweep under Friday's lows, recapture, break up, make a new higher high, come into an imbalance maybe in the 63.35, 63.30s area. Could be interesting there for a intraday long setup, but that is only, again, if we retest and break underneath Friday's lows, that this setup would be valid. And of course, we're going to go over here on the bull side what could happen, or excuse me, on the bear side, what could happen if we do end up breaching this 62.35. What's the low here? 62.39 is the low. So if we start breaking under that and actually finding acceptance, okay, well, then we can talk about a different story. But here is one possible setup that we could have if we do in fact sweep the lows, but then actually end up recapturing. So we'll see what happens there. Either way, that being said, again, just speaking on what the bulls need to get over here, that 62.65 area, I'm going to start to feel a little bit better. But as long as we are trapped in part of this range, well, we're going to have to consider that bearish consolidation, right? So with the lows right here. All right. But if we are able to get back over, and again, the 65 is opening the door. But for me, I really need to see, and if you follow me on Twitter, I'm going to put some links on the description here if you do not follow the Twitter. And you can see I've been doing some analysis for either NQ or ES on my page, but not both usually. Only certain people, certain places get that information. With all that said, the 62.75 was a previous chomp level, so I really want to see over that. We do have a purple line right here indicating a lot of a lot of activity in this specific spot, pretty much probably about half back, I would have to say, of the Friday range. But either way, over that 62.75, okay. Well, then I'm feeling a little bit more comfortable about potentially attacking these A period single prints up here. So I'm going to say over 62.65, that gives us a little bit of a, that's where I get bullish neutral. If we're down here under 62.65, I would just say I am bearish overall, not extremely bearish. Extremely bearish will be breaking under Friday's low, but we will get to that. But here I'm going to be in a bearish mindset under the 62.65, up and over 62.63. I get more of a neutral stance here to a possible bullish, but in this case, we really get, for me, I get more of that bullish confirmation over 62.75, and then I believe we can start to attack the upper part of the range. For me, 6,300 is going to be the next area. Maybe we just get into this F print here from, what is this, about 12 o'clock lunchtime. So maybe we only get 62.97, but okay, I'm not splitting hairs over 3 points there. 62.97, 6,300, pretty much my next target if we do in fact find acceptance over 62.75. I will be looking for price to start to attack up into this area once again. Now we could potentially find some resistance there, yes, of course. So I would watch out for either A, that being a profit target place, or also where we see some sellers start to step in. Value though on the day of the Friday session was capped off at 62.90 or 62.80. So that is also kind of worth noting that if in fact we do reject the 6,300 area, maybe the 62.90 could come up and set us up for an hourly higher low or a 30-minute higher low, which in this case, if we are going to stay bullish, we are over the 62.75 after all. That might be a place where, oh, that is ugly. That might be a place where, there we go, where we want to look for a lower, higher low, excuse me, to put in, and then the trade back up. I mean, this is 20 points here, which on ES, of course, is still a great trade. Ultimately here, if I was to take this trade off the 62.80s, I probably would be trimming here most of the contracts out, holding runners then to see if we can break and accept over that 6,300, and then looking for the highs of the Friday session right around 63.15, 63.13. That would be probably my ultimate target. Then maybe holding 1-2 contracts, very limited at that point for that potential gap fill back all the way. But I think that's kind of more of a swing trade type of situation. I would be very I'd be a little surprised to see the market breaking over 63.15 and then in one day making it up 45 points. Things can happen, but I just don't think the SPOOs can make that type of a move overall. That being said, if we do break over the highs from the Friday session at 62.13, well, it's not that much higher up, but we do have the session from the lows from the, what is this, July 22nd, right here, right around 63.18, 63.20. I think that probably would be the more likely target that you would want to look at if in fact we do find acceptance over those highs. But ultimately, yes, we are in the gap at that point, and certainly we can rise up a bit higher. And probably the next area I'd be looking at is this value point of control, probably within 63.30, 63.35. And we had been over that level again on my Twitter for some time. So that is also another key area right there as well. So, of course, it is not a perfect path, but let's just say for that, we come back, retest the 6,300. If they reaffirm those bids, come into the lows from the 22nd, right at 63.18, up and over that. Well, then we can talk about the 63.30. So that is my bull path there for the E-mini S&P futures. So let's talk a little bit more about the bears here, and we're gonna have to go back a little bit, because we have to go back here in time to see a little bit of context of where actually we did end up bouncing. And once we zoom out, you can see here the lows from the 16th, as well as the lows. Let me just check right here. Okay, no, I thought it was the lows from the 2nd, but very close. Very close. The lows from July 2nd was 62.30. So we can just find out exactly what it is. 62.38 quarter, and it's 3 points away. So again, I think that is pretty much fine, but you can really see here where these lows that we have come into is a big area for the markets overall. So we want to see, the bulls really need to make sure that they can hold on to this area. Otherwise, watch out. It can get ugly. We can put it out here like so. Right? And you can see the points here where we have hit into. Right? It's kind of these highs too. Okay, fair? All right, so underneath though, so as I mentioned, come back. Okay, we got to do a very zoomed out look here. But you can see this zone. Right. So start breaking underneath acceptance. Now, what did we say at first, right? Well, let's come under here. Right. Staying under this area right here. Consider that, whoops. Consider that bearish. Possible redistribution. Right. Take out J period low, 62.35. I think the low is 38, but it's 39 actually. So fine acceptance. We're going to head back down into the 20. So probably another 15 to 20 point drop, 39 to 20. Okay. We'll probably come into 62.20s for the downside at that point. And if we are able to break underneath the 62.20, well then for me it would be very likely we might have a little pit stop right here. 62.11, I could definitely see that. 62.10 basically, that can be the area, but we have a zone. 62.10 to 62.04 would be my next target to the downside. Real close to the 6,200 once again. So that is pretty much the plan for me and the bearish scenario and the bullish scenario. So let's see what happens upcoming this week. Pretty much a low impact week. But, with the AMD, we could have that play a little sympathy into NVIDIA, and that could definitely end up moving the market as well. All right, let's go into the NASDAQ here. And I have where we closed this one. Where do we close? NASDAQ has been relatively stronger. All right, we did close on the first part, but not even half back. Okay, let's go over for the bull side here. Right, we closed at 22,870 basically, so right in this area, and that's going to pretty much start to open the door here. I think that sure we can say under 2,300, under 2290 or 975, we still have an issue under this area here. I mean, this is definitely trapped inventory, and the same thing on the SPOOs. But if we stay under 22,900, 22, and I'm gonna give it 20 points, but 22,885 really. But I'm gonna give it just to the figure there, so give or take. But as long as we stay under here, we have to consider this and as bearish consolidation. Now, be aware and just watch out for the potential of any look above and fail, so we could have that as well, where the market comes up, fails back down, and then does something like that, generating more overhead supply right in this area here. So that can happen as well. Watch out for that scenario. But all things being equal, anything underneath here, okay, we're going to consider bearish consolidation underneath, and then again looking for those lows to break. But don't want to get too much in the bear side right here. Let's just talk about the bullish scenario more overall first. All right, so let's take away this, and I will say that the look below and look above fail can be on both sides, right? And just like we went over the SPOOs here, we can get something like that happening, and then maybe something like that. But that is not, that is just something to kind of be aware of overall. So let me just draw back these areas here. Okay, so let's get back over 900, 22,900, right? If we can see price hang out up in this area, and we still are within yesterday's and Friday's value, but up and over 2280, 800. Okay, then we can talk about retesting the 2300 once again, but that's really the area where I want to see the bulls find acceptance over. If we can over 2300, then I'm open to retesting the highs of the Friday session. Once again, the same thing basically as the SPOOs here, up and over, and then we can attack the highs once again. Now I'm going to pay attention here. We do have some of the lows from the 22nd again to contend with, right around basically 2395, 23,100, even number as well there. So there is the potentiality of us rejecting there and coming back down to retest the 2300 again. Whether or not we bounce from there, of course, if you're bullish, you would hope so, but definitely watch out for those lows from the July 22nd session. But up and over that, again, we still have the 23rd lows too. So really you can kind of take this as a little bit of a supply area here that may interfere with the bulls. I'm just trying to shade it in so you can see, but this area, about a 40 point, 50 point range there from 100 to about 140, and that can be an issue for the market. But all things, if they are able to get over that, the real target would just be, Friday's highs, right? And then we can start talking about potentially moving up a little bit higher. But a lot of lows here in the area. Even we have the lows from the 21st as well. And that's pretty much, no, 21st. 21st would be here, so this 23,250, pretty good, 23,280, so about 30 points there. So I think that that's fair, especially with the VIX where it is, but up and over the highs. Let me see what time this was. Okay, 8:30. So up and over 23 180 can look to 215 and then 250 potentially coming into those lows right here. A little bit smaller gap on NQ, and like I mentioned, the NASDAQ 100 has been leading the way overall, but we had a lot of those tech earnings, of course, with Microsoft helping out on this side of the aisle. But like I said, over 2,300 is really the confirmation to get bullish. Over 23, 850, 875. Okay, I can start to feel a little bit better about that bull side, about attacking those highs, and then from Friday and potentially getting into the gap and retesting those closes. But like I said, a lot of areas, a lot of previous lows here that can cause some issues, right? So watch out for that up above. But I think over 2,300 you can feel. And just because, again, remember, just because 2,300, that potential bear pivot or bear and bull pivot or chomp zone, there are still long trades that can, present themselves even towards the lows. And like I mentioned, that look below and fail is certainly one that could be interesting to me if it presents itself, if we sweep it and recapture. All right, so let's talk about a little bit more. And we got to zoom out now because it's been a while since we've traded in this area. But you can see pretty much, again, same thing as the SPOOs, a lot of areas here. The lows from, again, probably the start of the month. Yeah, this was back in, what is this? Back in June. This is the start of the month. So I would say, right? Big spot. I'm going to even do a little kind of demand zone. Keep an eye on those lows from the 15th. All right, that's around that 22,800, 22,815. Okay. But breaking underneath the lows from the Friday session, well, then watch out below. I think the next area there, 22,722, 22,720, we'll call it, to make it even. Right there, I think, is a big spot. And breaking under that, well, then watch out. I don't see why we wouldn't potentially come down at least another 75 points down to 22,600. All right, I want to try to see if there's anything else that could really stick out to me as far as standing in the way. No, I don't think so, especially if we break 22,700. And I really see, if this breaks, it would be probably pretty easy to drop another 70 points, right? If 22,700 breaks, well, then watch out. We're going to attack the lows from the end of the month in June. So we'll probably come down to the 600s or the high 590s, 22,590 to 22,600 would be my guess down in this area. But I figure personally we'll probably have some type of a retracement a little bit, and we'll see. I mean, as far as things are concerned, we closed all the way down in this area. This is all overhead trap supply. This is all probably overhead trapped inventory too, of people that bought with a bad trade location. Let me post here. So these people are all trapped. These people are all trapped. And if they are still in, any of these traders are pretty much all trapped. So a lot of areas for the bulls to have to, and we're trading right in this area right now. So that's where we would really have to start to break over to have any type of retracement. Let's see if they can get over the 22,900 for that 100-point retrace. Maybe a quick little stop at 22,980, but we'll see what happens there. Okay, well, that's pretty much everything I have for the E-mini S&P futures as well as the NASDAQ 100. I will just go over VIX here audibly. I am working on the transitions here in my system, but I don't have that really set up quite yet. But I will say here, as long as VIX holds over 18, okay. Under 19 would be a warning sign, but holding over 18, 19, all right, watch out, especially if we hold over 20, more volatility in the works. Hold over 18, 1850, and back over 20, 2211 is in the works. Over 2211 takes us to 2370, 45. We could reject at the 2211 area, so watch out there, and we may just end up consolidating between that 19 and 22, the 2211 area, which probably would be bullish consolidation. Anything under 1875 can look a little bit more bullish. So let's see. Holding over 19, I would say bearish. Up and over 22, even more bearish, or 2215, excuse me, even more bearish. Breaking underneath 1850, you get a little bit more bullish. And under 18, certainly more bullish. So that's what I've got. All right, guys. Well, I hope you've enjoyed. Remember, plan your trades. Trade your plan. A prepared trader is a profitable trader. Thank you so much for joining this week's video. Really appreciate it. Don't forget to like, subscribe, comment, and share the video. And I hope everybody has a great rest of the weekend. All right, take care.